How's everyone doing? What's happening? We've got a little bit of backing music today with the FOMC. I think we'll probably watch it live. Let me know how it sounds with the music and me talking. Do you want me to lower it? Let me know what your thoughts are. How's everyone doing? So we're going to watch this. We'll watch this live. And we could run through it and see what's happening. Let me know if you want me to mute this, if it's annoying. How's everyone's session been? So we'll probably bring up indices when this happens. How's everyone's trading been? It's been quite an action-packed day in treasuries, to be honest. It's been a good day. We traded UB for a change today. T-Ball, how's it going, buddy? Trade open, that's it, no problem. Yeah, I traded, I think, just before. Had some pre-market trades in the Ultra Bond, and I took some in just about 30 minutes or so after CPI print in the bond open or treasury open, and then we basically took a long on the 30-year and we covered about 19s. I think we took a long. We took out 2 or 3 ticks or something. So it was good session, to be honest. So we're going to see what action's going to bring. We'll probably bring up ES and so on for when it's going to happen. But I thought it would be interesting to see if we can watch the conference. The last conference, basically they said absolutely nothing that would stimulate the stock market to go bid, and then literally as Powell stopped speaking, the market absolutely dumped. So I'm going to see if we see a repeat, and it's probably going to be some of the same narrative, you know. We need to see inflation stabilize, we need to see better labour market, you know, we need to watch out for jobs, the usual carry on. Same stuff they see every time, but it's where all the volatility happens, right? So we'll see if anything nice arises, but we'll probably take it easy, considering we've had a great day. So we've got a raw setup here, where we have a market profile. Oh, I have just ruined it. me go. So we've been, this is essentially before the print came out, we went extremely bid, and then we've just, look at that, right to the tick and hit above the NFP high, and then we're now consolidating around here. So are we going to have the classic in treasuries? Are we going to fade right off and come back down into this highly traded out area down here, or are we just going to rip? We would be printing highs in the new contract. And then we just have up our standard tick chart where we can see delta. So main sort of idea for treasuries is going to see if they can hold above the NFP high area, or if we're then going to just reverse right back down and consolidate down here. Is the general idea. Look at that, right to the tick as well. That just never happens in indices, does it? Never happens in ES. This would be like a way up here. And then it would reverse back. It's to the literal tick. It respects levels really well, which is great. So what's everyone's predictions, do you think, for the FOMC? What do we think? Jim, we'll have a bid in treasuries and a sell-off in indices or in stocks. What do we think? Yeah. Yes, there's always, I mean, regardless of, you know, if we take the last FOMC for example, I need to bring it up in a chart, but the last, in fact, I can maybe bring it up in the chart. We've got a while, so we could probably bring it up on the chart, to be honest. But the last FOMC, they said nothing hawkish for indices. And the market went absolutely parabolic, and then as soon as he finished speaking, it just absolutely dumped, and it caused so much pain for everyone, both sides, and then it literally, the market closed where it started. So it depends on which market you're watching. AP, it depends on which market you're watching. So they're all basically the stock market and ES, for example, or indices. They prefer much cheaper money. So the cheaper money is, it's better for stocks. And then if they raise interest rates, essentially, you know, it hurts the dollar. It depends how the market is going to take it for treasuries as well. But to be honest with you, get into these things unless there's like something really, really sudden. The market already prices this in. Do you know what I mean? You've got huge investment banks with really good analysts, and probably already tipped off as well. So, you know, they've already been putting the positions in for the last 2-3 weeks. And it'll be hedged across the board for these meetings. So in my opinion, anything that really happens in these meetings is just used as volatility to get more positions, you know. Yeah, I mean, most likely in just typical market fashion, you know, we go bids in the morning, FOMC comes out, and then we basically correct. But then, to be honest with you, James, the Apple, the big six, they just go bid all the time anyway, right? I just think there's an absolute mania in stocks. There has to be a correction. It just doesn't make any sense as to why the stock market is absolutely ripping this year, to be honest. Look how pulled the bid and offer is here. Right, let's go to we'll switch to ES quickly. Yeah, that's a good point. Election year, that's a really good point. Wow. So there we go. Look at the volatility, it's crazy.
The Federal Reserve System works every day to support a growing and stable U.S. economy. Across the United States, the Federal Reserve, through its Federal Reserve Education Program, also helps people understand how the
aggressive
economy
amount of
works,
selling
so
just come in.
consumers have the tools to make sound financial decisions. Through this education program, teachers have access to classroom-ready online
I suspect the moment the until they actually come out with a speech, I mean, this is just the initial.
Publications, and more. These resources are all free for educators to use in their lesson plans, or as they see fit. Many of the Federal Reserve System's regional reserve banks, located in 12 districts across the nation, also offer in-person and online professional development that allows educators to deepen their knowledge and hone their craft when it comes to economics, personal finance, and more.
I don't think we're really expecting much, to be honest.
Students too can take advantage of in-person opportunities by taking tours of exhibits in many of the 12 Federal Reserve banks around the country. Whether a student visits with their family,
it's crazy how thin the ES is these days versus a number of years ago. You know, it's extremely thin now.
At the board and reserve banks, students also get hands-on opportunities. Like
I'm assuming no one's trading this, right? You know,
introduce them to key
crazy
economics concepts and potential careers in economics and finance. Consumers are empowered to make sound financial decisions through
Hello Neil, how's it going?
easy-to-understand resources that explain
Look at that,
concepts,
classic.
the broader economy, and the Federal Reserve's role in it. Federal Reserve Education is committed to equipping educators, educating students, and empowering consumers when it comes to understanding and participating in our evolving economy. For more information, visit federalreserveeducation.org to find links to resources and reserve bank programs offered near you, and follow Federal Reserve Education on Twitter at @FedEconEd.
So interesting to see if we're going to smash highs or we're going to just reverse back to where we were.
Hi,
before
I'm
CPI.
Pete, and I work for the Federal Reserve, the central bank of the United States. The Federal Reserve System consists of three main entities that perform key functions that serve the public and promote the health of our economy.
I was just saying there how
financial system. These key entities
well, this is not a good example of it, but just how thin ES is now. It's, you know, in comparison a number of years ago, it was like 300-400 bid and stuff.
Based in Washington, D.C., the Board of Governors
It's a shame how thin it is now.
Federal Reserve System. It's an agency of the federal government that reports to and is directly accountable to Congress. The board consists of 7 members, or governors, who are nominated by the President of the United States.
So is everyone ready? Has everyone got the popcorn out? You know, if you got some pizza, maybe have a beer, if or coffee at least.
Federal Reserve banks located around the country, which take the pulse of the nation's economic health from a regional perspective. The 12 reserve banks represent different geographic regions, or districts, and were set up based on regional economic considerations. Although supervised by the Federal Reserve Board, the reserve banks operate independently in many respects. The reserve banks carry out a number of core system functions, such as supervising and examining commercial banks and other financial institutions, enforcing compliance with federal consumer protection and fair lending laws, while promoting local community
We could have a nice chill stream. Plenty chip and dip. You know.
They and the board also play a key role in another primary Fed function.
It's been a good day today.
Payment systems, including distributing currency and coin to banks,
I see this 100 holds.
and clearing our checks. In addition, the reserve banks act as the government's bank,
13 traded on it,
such as maintaining the Treasury Department's transaction account and issuing and redeeming U.S. government securities.
They're just not taking that full 100 lot, are they?
For banks by providing key financial services to banks,
there we go.
thrifts, and credit unions. The reserve banks also provide a wealth of information on conditions across the nation. Information that is vital to formulating a national monetary policy that helps maintain a healthy U.S. economy and a stable financial system. The board and the reserve banks together help ensure that consumer and community voices are heard at the central bank through consumer-focused outreach, research, and analysis. This helps keep the Federal Reserve's actions, policies, and decision-making attuned to what's going on.
Okay, so key levels are going to be just effectively retracing this.
Is the Federal Open Market Committee, or FOMC, which brings together representatives from the board and the reserve banks to consider
this is going to be mayhem.
And set a course for our monetary policy.
It always is.
Seeks to promote an economy that works for all Americans.
You guys don't trade this, surely? Like, do you trade maybe after he finishes speaking? I mean, I've always just stayed away, to be honest.
Promoting maximum employment and price stability.
Or between like maybe now and till he starts talking, till the Fed comes out.
Including economic productivity.
It's maybe your time, but as soon as he starts, it's wild.
By households, communities, and businesses. Working together, these three key Fed entities and the unique Federal Reserve System structure established by Congress more than a century ago help promote conditions resulting in a strong, healthy,
you trade it.
and sustainable
Nice.
economy.
So I think he's due to speak in the next. Let me see. I've got this up. It's due in past. So he's due in about 20 minutes to talk. So vote in favour. Do you guys actually want to watch him speak on stream, or do you want to? Can you guys hear the audio? Do you want to hear the audio and watch the charts? Any preference? Let me know. Type speech if you want to watch the speech, and charts if you want to watch the charts. I suppose we could maybe watch both, but it's hard to. Hey Dimitri, there's my hype man. Yeah, it's a good idea. Let me see if I can do that. Let me see. Is there like a cinema button here? No, it's not YouTube. See if this takes us away, I'm going to be annoyed. Oh, there we go. Like so, we've now got the best of both worlds. Well, that squashed that problem. Neil the problem solver. So let's have a look down here. I mean, this has just been a wild day already, to be honest. But the main question is, are we going to go back down and reclaim this area down here? Or are we just going to absolutely blast higher? Typical how the market does, it's never going to be straightforward, is it, right? There's going to be probably take the highs up here. Take the highs up here, reverse back, chop around, finish down here. Fugazi Buster. Taken straight out of Matthew McConaughey's pitch. That was a great scene in that movie. Yeah, it was pretty quick this morning, right? And obviously as well, that was before the open. Or is that bond open? So, I don't know, you know how much the market likes to just, you know, considering nothing really is going to happen today, realistically, it's not going to change the status quo. So, when the market, when nothing truly is happening for the next number of months, today's just a nothing day, really, but it's used as a day to create tons of movement. So I wouldn't be surprised if we regain where we did this morning, to be honest, or where we left this morning. I can tell you one thing though, there's certainly going to be plenty of action. It's not going to be as slow as yesterday. My gosh, yesterday's stream, like how bad was that price action yesterday? To be kind of expected, you know, I suppose before FOMC, but not as bad as that. I wouldn't trade it, Neil, no. Brandon, I do, mate, yep. Of course. But the thing is, it's FOMC. And I've already had a trading day today. Plus as well, it's 7 PM for me right now. Trading FOMC is crazy. Need to probably at least 15 minutes till it calms down, but even then, if you've had a great day, there's no point in trading when this volatility happens, to be honest. Unless it provides a really clear-cut setup, but we'll see how it pans out. Is Apple still going bid? Yep, so Brandon, I switch between trading treasuries and ES. I only use NQ, the Russell and the Dow for correlations. But most of my trading, I would say probably for the last 6 to 8 weeks, I've still been trading ES, but the majority of what I've been doing has been trading treasuries, predominantly the 10-year note and the 30-year bond. So it's the and when I'm executing on those charts in the DOM, I'm using the 5s, 10s, 30s, and depending on the day I'll use the ultra bond for correlations as well. And treasuries is a completely different beast, completely different animal to ES. And NQ on the DOM, we've actually got the ticks combined. So every movement in price you're seeing here is a point. So it's 4 ticks. Because NQ is such a thin market that it just bounces around. So it's really hard to notice the order flow. But depth of market essentially in your DOM trading should be the final piece of the puzzle. You know, you still need to do your own analysis and work out your key levels, but the depth of market is there to help refine your entries essentially. You know, because there's a reason why certain support levels, certain resistance levels hold. It's because, you know, a large order steps up and essentially either holds the offer or holds the bid. And it gives you an inclination as to when some size is actually coming in. No problem, mate. No problem. Ask as many questions as you like, buddy. So it depends on the day type, right? And so if for this specific day, I mean, today's not a great example because we're just so out of whack. You know, we could literally do anything right now. They could come out and speak. The market could rip the highs, sweep up here, reverse down here. I mean, no one knows, right? We're not here to even guess that. You know, this is just entertainment, pretty much. When these guys are speaking, you know, just get the popcorn. There's not really any edge or any opportunity in this, right? But when the market is in a normal, stable environment and it's in balance, and what I mean by balance, right, is like, you know, we'll call it a day like this, right? So the market goes down at open, then we rip back up into previous day's value, and then we sort of balance around. When you're breaking out of the previous day's value, right, you're then looking to see either absorption, or then you're looking to see the bid been pulled, what has delta been doing on the day, and then you're looking to confirm it with order flow at the exact times. So ultimately, when the market is at point of control, whether that be the point of control in TPO or point of control in your volume profile, there's not really an edge when the market is at a point of control, just because it's where the most volume's carried out. So there's your Sorry, I just pressed the mute button. You're expecting to chop around point of control. So it's the number one thing that you can't teach. This is the hard part. It's why I don't advocate teaching strategies per se. Some of the things that I want people to focus on is be aware of the games that market makers play. Realize that spoofing is a thing, and you just need to understand that you need to have experience and time in it, because ultimately we're all trading discretionary here, right? There is an element of mechanical trading to some of it, but realistically, if mechanical trading worked, we would just write it in an algorithm and go to the beach, right? So a lot of the time it comes with screen time, understanding context for the day, what time of day is it, when's the most volume come in, how are correlations for the day, what type of day type, Where's the initial balance low? You know, a lot of it you need to factor in, and ultimately the main thing is whatever which way you decide to go with your trading, you need to make sure you manage risk. The number one thing with so many people that come to me and I chat with them, and they continually have no problem putting up green days, but when they have a losing day, it wipes out like 4 or 5 of the green days. It's almost better to have more losing days, not more losing days, but have a slightly higher number of losing days to green days as such. I'm butchering explaining this. So instead of having instead of having 5-6 green days that are relatively small and then one huge loss day, it's better to just have slightly more red days than that, because it stops this boom and bust phase, and it's typically how people get into trouble in trading. I see that happen a lot. So you need to keep your down days manageable. The word salad for me to explain that there, so I'm sorry. Not enough coffee. Howdy. This chat's been the biggest help in putting all my trading pieces together, chart, film, profile. Nice. Nice, buddy, I'm glad. I'm glad it's been valuable to you, man. And look at that, right back at POC. Cami trades. Can you... are you part of Discord, Brandon? If you ping, I'm not too sure. I feel like I should know who that is. But to be honest with you, man, I tend to keep myself in my own lane, you know, and I really appreciate other people if they find the content valuable. I really appreciate that. So tell Cammy thank you if he was recommending the channel. Cammy Capital. I feel like I've watched a few of his things before. Let me check that out. Let me have a look. Ah, I did. Okay, he recently did a video on OrderFlow, how to trade OrderFlow. Nice. Nice. I need to watch some more of his stuff. Thanks for the heads up about that, mate. I didn't realise that was the case at all. Well, hopefully you enjoyed the stream. Did you see that 200 lot there pulled? We're at it again. We saw so much spoofing. Not yesterday. It was the... what day is this today? This is Wednesday today. It was Monday. There was so much spoofing on Monday. In fact, Neil will remember. Was that Monday, Neil? Or was that... it wasn't yesterday. My memory's terrible. Okay, so 8 minutes to showdown. Monday and a bit Tuesday. Yeah, I thought it was Monday. Monday was crazy. There was 200 lots been spoofed every couple of minutes. There's an R100. Let's see if they're going to do it again. Let's clear so we can... Okay, so the market's ticked up off it. This is normally their intention, to see if the sellers are going to be aggressively taking it, and then we'll notice, and then it's pulled. Yep, classic. So it's like they're always flashing these just to see if sellers are going to bite, and if they're not biting, then they're just lifting into the offer because they realise the offer is weak. Can't be any other way about it, right? It's happening constantly. Yeah, exactly, Grace. I mean, the thing is, we started off the year where, you know, there was going to be like 3 and 4 cuts and stuff. If numbers change over the next quarter, there could be not any cuts at all, you know. And as you guys know, that the recent job numbers that come out, they're revised in like 2 months anyway, to be something more accurate. So the job numbers that come out right now are not exactly very accurate anyway. So it's not like they're going to be using those numbers in their actual forecasts. They need to wait for the revisions to come out, because they're sometimes wildly different. So we're pretty much just going to go into the speech where we started. So we saw the initial dump. So let's see if it's doing the same now in the offer. Let's see if this is pulled, or they're actually going to trade this out. Watch this 100 lot, see if it pulls. If it is, it's the same firm that's just doing it down here. So all they're doing is basically capping the range, taking the free money on their side at least. Yeah, they're stepping up with that. The market's then pulling bids. Classic. Well, Brandon, the thing is, unless it's us that's doing the spoofing, we don't really know the true intention of the order. But just the games that they're playing right now, there's absolutely zero direction. Let me clear this quickly. So we noticed the 100 lot that was down here. The market didn't take the full amount, and then essentially started to lift into the offer. And then if they pull this, it gives a, you know, an idea that essentially they're just spoofing and pulling the offer in the bids. So we'll see if they take the full amount here, because front running these orders, you're kind of going to get more likely steamrolled front running them, but it gives you an idea as to what's happening. So the market's ticked off it, and it's just taking it. Okay, so that would then let you know that buyers are actually, you know, taking the full size there, and then see if they're going to be taking the next 100 lot if they take the whole size, and they do. So in the comparison to how that is down there, where they didn't take the whole size, you can see now that buyers are aggressively lifting into the offer. Just as a general theory, I'm not saying that that's a trading opportunity, it's just something to note. And right now we are at POC, so unlikely until the news comes out and the speech starts that we're going to see anything really. Yes, I could do that for you, buddy boy. What was it, clock or something? Or is it chart? Or let me see. Here we are. There you go, mate. Just like that. Hey JP, so I was thinking of doing a video on this because it took me a lot of faffing, and you're right, if you just change it, I'll do it quickly here for you, mate. How long have we got left? 2 minutes. Go to chart settings, and then you need to change the volume. Was it this? Yeah. This is NQ, isn't it? Yeah, so change this. I don't know, that doesn't look quite right. It should be 1. I'll need to look at it, mate, and see, to be honest with you. Need to look at it. You basically need to change you need to combine the ticks, and you need to change the value of it so it doesn't mess up the DOM, because if you change it, you'll notice everything's all wonky. I need to do a video on it, man, so I'm not giving you I'm not giving you wrong information. So Brandon, this is the thing, when you get really proficient with the DOM and you combine it with your key levels, you know, you just get a real idea of where the market is going for the next 10 to 15 ticks. And that's essentially all you're doing here. Trying to call the next 50 ticks is just unlikely. It's not gonna happen. Especially when the VIX is the way it is. ES doesn't drop 20-30 ticks or go up 20-30 ticks in a normal environment without pulling back and stuff. Yeah, no problem, mate. I'll work on it and have it out for you at the weekend. I think I tried to do 2 videos. I tried about 2 videos as well as streaming. Week I tried to have some at least content out daily for everyone to watch. Sometimes it's longer videos, sometimes it's shorter. Here we are.
Good afternoon. My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum stable prices for the benefit of the American people. Our economy has made considerable progress toward both goals over the past 2 years. The labor market has come into better balance, with continued strong job gains and a low unemployment rate. Inflation has eased substantially from a peak of 7% to 2.7%, but is still too high. We are strongly committed to returning inflation to our 2% goal in support of a strong economy that benefits everyone. Today, the FOMC decided to leave our policy interest rate unchanged and to continue to reduce our securities holdings. We are maintaining our restrictive stance of monetary policy in order to keep demand in line with supply and reduce inflationary pressures. I'll have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that economic activity has continued to expand at a solid pace. Although GDP growth moderated from 3.4% in the fourth quarter of last year to 1.3% in the first quarter, private domestic final purchases, which excludes inventory investment, government spending, and net exports, and usually sends a clearer signal on underlying demand, grew at 2.8% in the first quarter, nearly as strong as the second half of 2023.
Hello, we're all doomed.
Growth of consumer spending has slowed from last year's robust pace, but remains solid.
Okay, we are.
And investment in equipment and intangibles
Correlations
has
are
picked
moving
up
down at the
from
moment.
its anemic pace.
Let's see if we can at least get some fall through some way.
Improving supply conditions have
The
supported
Russell is going
resilient
bid right
demand
now.
and the strong performance of the U.S. economy over the past year. In our summary of economic projections, committee participants generally expect GDP growth to slow from last year's pace, with a median projection of 2.1% this year and 2.0% over the next 2 years. In the labor market, supply and demand conditions have come into better balance. Payroll job gains averaged 218,000 jobs per month in April and May, a pace that is still strong, but a bit below that seen in the first quarter. The unemployment rate ticked up, but remains low at 4%. Strong job creation over the past couple of years has been accompanied by an increase in the supply of workers, reflecting increases in participation among individuals aged 25 to 54 years, and a continued strong pace of immigration. Nominal wage growth has eased over the past year, and the jobs-to-workers gap has narrowed. Overall, a broad set of indicators suggests that conditions in the labor market have returned to about where they stood on the eve of the pandemic, relatively tight but not overheated. FOMC participants expect labor market strength to continue. The median unemployment rate projection in the SEP is 4.0% at the end of this year and 4.2% at the end of next year. Inflation has eased notably over the past 2 years, but remains above our longer-run goal of 2%. Total PCE prices rose 2.7% over the 12 months ending in April. Excluding the volatile food and energy categories, core PCE prices rose 2.8%.
Complete balance right now.
The Consumer Price Index, which came out this morning and tends to run higher than the PCE price index, rose 3.3% over the 12 months ending in May, and the core CPI rose 3.4%. The inflation data received earlier this year were higher than expected, though more recent monthly readings have eased somewhat. Longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households and businesses and forecasters, as well as measures from financial markets. The median projection in the SEP for total PCE inflation is 2.6% this year, 2.3% next year, and 2.0% in 2026. My colleagues and I are acutely aware that high inflation imposes significant hardship as it erodes purchasing power, especially for those least able to meet the higher costs of essentials like food, housing, and transportation. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. In support of these goals, the committee decided at today's meeting to maintain the target range for the federal funds rate at 5.25% to 5.5%, and to continue reducing our securities holdings. As labor market tightness has eased and inflation has declined over the past year, the risks to achieving our employment and inflation goals have moved toward better balance. The economic outlook is uncertain, however, and we remain highly attentive to inflation risks. We've stated that we do not expect it will be appropriate to reduce the target range for the federal funds rate until we have gained greater confidence that inflation is moving sustainably toward 2%. So far this year, the data have not given us that greater confidence. The most recent inflation readings have been more favorable than earlier in the year, however, and there has been modest further progress toward our inflation objective. We'll need to see more good data to bolster our confidence that inflation is moving sustainably toward 2%. We know that reducing policy restraint too soon, or too much, could result in a reversal of the progress that we've seen on inflation. At the same time, reducing policy restraint too late or too little could unduly weaken economic activity and employment. In considering any adjustments to the target range for the federal funds rate, the committee will carefully assess incoming data, the evolving outlook, and the balance of risks. In our SEP, FOMC participants wrote down their individual assessments of an appropriate path for the federal funds rate, based on what each participant judges to be the most likely scenario going forward. If the economy evolves as expected, the median participant projects that the appropriate level of the federal funds rate will be 5.1% at the end of this year, 4.1% at the end of 2025, and 3.1% at the end of 2026. But these projections are not a committee plan or any kind of a decision. As the economy evolves, assessments of the appropriate policy path will adjust in order to best promote our maximum employment and price stability goals. If the economy remains solid and inflation persists, we're prepared to maintain the current target range for the federal funds rate as long as appropriate. If the labor market were to weaken unexpectedly, or if inflation were to fall more quickly than anticipated, we're prepared to respond. Policy is well positioned to deal with the risks and uncertainties that we face in pursuing both sides of our dual mandate. We'll continue to make our decisions meeting by meeting, based on the totality of the data and its implications for the outlook and the balance of risks. The Fed has been assigned 2 goals for monetary policy: maximum employment and stable prices. We remain committed to bringing inflation back down to our 2% goal and to keeping longer-term inflation expectations well anchored. Restoring price stability is essential to achieving maximum employment and stable prices over the long run. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you, and I look forward to your questions.
What a nothing speech, honestly.
Thank you, Mr. Chairman. Steve Leisman, CNBC.
ChatGPT could have done
Wondering
that.
if you could walk me through the committee's average inflation forecast. Core PCE is now forecast to be 2.8% by the year end. It's already 2.75, and after today's number, there were several forecasts on the street that it would be 2.6 at the end of this month. Does that tell you that the average official expects no further progress in inflation?
See, last time he was done speaking, the market picked a direction.
If you have this
So
wrong,
let's see.
doesn't it mean that you sort of you could have wrong the outlook for rates there?
Yeah, so what's going on there is that we had very low readings in the second half of last year,
Roberto,
June
see our
through December,
charts.
really. And we're now lapping those. So as you go through the 12-month window,
James, they're basically
a very
just
low
saying
reading
they're
drops out and a new reading
waiting
comes
to
in, the
see
new reading
numbers
gets added
to
the 12-month
make any real
window.
decisions,
So,
but they're poised
it's just a slight
to
element
handle
of
any data.
conservatism that
It's just a
we're
nothing
assuming
speech.
a certain level of incoming monthly PCE and core PCE numbers. We're assuming, a good but not great numbers. And if you put that on top of where we are now, you get a very slight increase in
tons
the
of size
12-month
executed here,
in the
43s
12-month
with that 4-tick range.
reading. Now, do we have high confidence that that's right? No, it's just a kind of conservative way for forecasting things. If we were to get more readings like today's reading, then of course that wouldn't be the case. So it's just a forecasting device. I think. Let me say that we welcome today's reading and hope for more like that.
But if it comes in, just to follow up, it comes in the way you forecast it, it would seem strange for you to be cutting rates at all in context of a rising core PCE. Thank you.
Yeah, no, I mean, I think what we said is that we don't think it'll be appropriate to reduce rates and begin to loosen policy until we have more confidence that inflation is moving back down to 2% on a sustainable basis. And that's the test
Right,
we've
so surely
applied. I don't know that
that's not
I think
exactly
if we-
great, is it?
I don't know that this rules that in or out. I mean, really, it's a forecast, a fairly conservative forecast, month by month, that would lead to slightly higher, 12 months rates by the end of the year. If we get, better ratings than that, then you will see that come down or remain the same. If you're at 2.6, 2.7, that's a really good place to be.
Nick Tamaros of the Wall Street Journal. Chair Powell, if I look at the rate projections, I see 15
I've really got
and
no
19 that are anticipating either
comment
one or
about
two
extra
cuts
charts. I've
two
heard-
cuts this year.
Not
fairly
used it myself
evenly split
personally, so
between
I
the
can't really
two.
give a review on it,
And
but
so I wonder if you could
I've
explain
heard
a
some
little
people
bit
say some
more
good things about it. The
the
Russell
nuances of the differences there.
is
Would
dropping.
2 or
I mean,
3 more
NQ needs to break
inflation
POC for any
readings
form of
like the
downside,
one
or just the
that we
POC.
saw this morning make a September
Sorry,
interest
yeah.
rate cut possible?
So as far as the SEP part of that is concerned, as you know, I talk to all of the other participants on the FOMC every cycle, and we talk about their summary of economic projections and the their dot plot and everything. And what I hear and see is that people are looking at a range of plausible outcomes, and in many cases they're thinking, I can't really distinguive between two of these. They're so
If you can
close
crack
from me. These are
36
very
this year.
close calls. But we ask them to write down the most likely one, so they do. And I think as you've said, there's 15 of the 19 are kind of clustered around one or two. So I think I would look at all. I look at all of them as plausible, but I'd look at so I think that does tell you kind of what the committee thinks. But what everyone agrees on is it's going to be data dependent. No one brings to this or takes away from it, that is on the committee, a really strong commitment to a particular rate path. It's actually just their forecast, and it's a combination of their forecast and their own reaction function. But again, everyone would say that this is very data dependent, and I don't hold it with high confidence. And I think if you're looking for and don't really think that they're not trying to send a strong signal that this is what I think is the right thing. It's just what they think at a given moment in time, subject to data. In terms of future meetings, we haven't, we don't make decisions about future meetings until we get there. I think in terms of what we need to see, I mentioned it earlier. We want to gain further confidence. Certainly, more good inflation readings will help with that. I'm not going to be specific about how many because really it's going to be not just the inflation readings. It's going to be the totality of the data. What's happening in the labor market? What's happening with the balance of risks? What's happening with the forecast? What's happening with growth? You look at all of that, and you ask, are we confident? Have we reached an appropriate level of confidence that inflation is moving down sustainably to 2%? Or alternatively, do we see really unexpected signs of weakness in the labor market that would call for a response? Which is another thing that could happen. But again, we don't see that, and we do see today's report as progress and as building confidence, but we don't see ourselves as having the confidence that would warrant beginning to loosen policy at this time.
And if I could quickly follow up, did you or any of your colleagues change your interest rate projections after 8:30 or whenever you got the inflation numbers today?
So this happens too often, but it does happen. It just is, data came, I think it happened a few meetings ago. So when that happens, when there's an important data print during the meeting, first day or second day, what we do is we make sure people remember that they have the ability to update. We tell them how to do that. And some people do, some people don't, most people don't. And I'm not going to get into the specifics, but you have the ability to do that. So that what's in the SEP actually does reflect the data that we got today, to the extent you can, reflect it in one day. I think you will see PPI tomorrow. We'll know more about the PCE reading as the month goes on, but the initial CPI reading and its, kind of first level translation to PCE, we did have this morning. We were briefed about it, and people were able to consider whether they should make changes. And as I said, some people generally do, but most people generally don't.
Janelle. Hi, Chair Powell, Janelle Marte from Bloomberg. As you noted, the labor market is now in many ways back to where it was before the pandemic. I wondered if you could comment on how officials are viewing that. So do you think that there still needs to be more cooling in the labor market to bring inflation all the way down to 2%? Or is there any sense that maybe the labor market is more vulnerable now to higher rates?
So we need to really try and break 16s before we've got any form of
by so many
movement.
measures.
Otherwise, we're just in this sort of large
kind of
range for today, right?
2 years ago, and we've seen gradually move back into much better balance between supply and demand.
But there is still downside until NQ.
We've seen labor force supply
can stay
come
below
up quite a bit through immigration and through recovering participation.
It's going to give
that's
ES
ongoing,
a fair chance till we see some
mostly
downside.
now through the immigration channel, but still we've had some increases in prime age labor force. In terms of on the demand side, we've seen quits moving down. We've seen job openings moving down. We've seen wage increases moving from very, very high levels a couple of years ago back down to more sustainable levels. We have seen unemployment creep up now 0.6 over the course of a year or so, very, very gradually. So you put all that together, what you have is still low unemployment, still 4% unemployment, historically low. But it's moved up a little bit. It's softened a bit, and that's an important statistic. But more than that, you've got strong job creation. You have payroll jobs still coming in strong, even though there's an argument that they may be a bit overstated, but still they're strong. So that's what we see. We watch the labor market, of course, and the economy as a whole, but the labor market very carefully, and that's what we see. We see gradual cooling, gradual movement
Did anyone take any trades?
Better balance. We're monitoring it carefully for signs.
The only
of-
thing
of
I think it
something
looked
more than that, but we really
relatively
don't see
decent
that.
is when
As a quick follow-up, the surveys
when
that
NQ
make up
essentially
the
broke
jobs
below and
report are
held
showing different tails. There's
POC,
been some
and then we
divergence,
had
especially we saw in
basically
the
the bid
last
been
report that
pulled.
we got on Friday. So
I think it was
how do you
roughly about
interpret
the sort of
that
36s
and how does
that
it
happened,
change
and
your
then we
view on
caught
labor
the
market?
So sometimes
It was
it's
a bit
you
down
can't
to like
reconcile,
30s, that's been
the
the only-
differences. You just have to look
the
at it
only
and
slither
try to
of an
understand. And that's why
opportunity
it
so
always
far.
makes sense to
But
look at a series, you know, in 3, 6, and
it's
12
not
months of
looking
things rather than
the
just
best
one report.
action
But
right now,
you're
is
right
it?
to point to the last report where there were job losses in the household survey, job gains, big job gains in the establishment survey. So, I mean, we're left with ambiguous results, and we have to deal with that uncertainty around data. Nonetheless,
Russell's
the
pumping
overall
here.
picture is one of a strong and gradually cooling, gradually rebalancing labor market. Job openings, while they've come way down, are still, you know, greater than the number of unemployed people. The jobs workers gap is still a significantly
me too,
positive
mate.
number, greater than it was before the pandemic. So overall, we're looking at what is still a very strong labor
the only
market, but not the
I mean, the only thing I would
superheated
consider
labor
is a
market of 2
long
years ago,
be
or even 1 year ago.
just not really, to be honest with you. I think it would need to be a short opportunity.
Thanks, Chair Powell. Neil Irwin with Axios. Back on the rates path, the SEP showed quite a large shift of rate cut expectations relative to March. That's a period in which the economic data flow hasn't been that dramatic a shift. How
Yeah, he's
can
a
you
lot
provide some
more,
color on what changed in attitudes on the committee over the last 3 months to see
He's basically a
much shallower
politician now,
path
Gus.
of rate cuts this year?
Yeah, the big thing that changed was the inflation forecast. So the inflation forecast moved up several tenths for the end of the year. And as I mentioned earlier in the, what did we take away from this? We had really good inflation data in the second half of last year. Then
basically,
kind of a pause in progress. in the
shorts
first
are looking
quarter. And
good
what we took away
until-
from that was that it's probably going to take longer to get the confidence.
As
that
long as we
need
can
to
hold
begin
above
to, loosen policy.
315
So,
on NQ,
the
because
sense of
NQ is
that
the one that
that
tends to be
rate
causing
cuts
the
that might
ES
take place
to
in-
drive.
might have taken place this year, take place next year.
So the next
You know,
low was we need to break this
there
low
are fewer rate cuts in the
that was
median,
put in just as
this
the
year, but there's one more next year. So you really, if you look at
as the initial
year-end
report come out
2025
here.
and 26, you're almost exactly where you would have been. Just it's moved later because of that progress. Now, you
This
get
is
another-
where
you
there's
get
more
data-
downside
different
gonna
data
happen.
today. So we'll have to see where the data
and there's
light
going to
the
be a
way.
lot of
You know,
stops. If we
we're,
can drive price
we're,
down to like
the
16s, then
economy
there's going to be a
has,
ton
you
of
know,
stops
repeatedly
because there's been
surprised
zero.
forecasters in both directions, and today was certainly a better
The
inflation
market's
report than
effectively
almost
gapped
anybody
up here.
expected.
Not very
And we'll
much
just have to
volume
see
at
what,
all. So if the market
what
breaks
the
here, then
incoming data flow
we're going to flush here pretty
brings and
quickly.
how that affects the outlook and the balance of risks.
Gina. Gina Smart. Gina Smart.
Yeah, exactly.
Thanks for
Note
taking
the-
our questions. In the summary of economic projections, the long-run
die.
interest rate forecast moved
classic.
up a bit. I wonder if we should read that as a sign that you think that policy is not sort of as restrictive as we previously expected. You know, how should we interpret what that means about how the committee views its current policy setting?
So two things about that. One is this. You're right, it did move up, but I want to remember to point out that long-run neutral rate of interest is a long-run concept. It really is a theoretical concept, can't be directly observed, and what it is the interest rate that would hold the economy at equilibrium, maximum employment, and price stability, potentially years in the future where there are no shocks. So it's a little bit, it's not something we observe today. Today we've got a very specific economy with all kinds of shocks we're still getting over from the pandemic. So it's, I don't think that the concept of R-star, it's a very important concept in economics and in what we do, but honestly it doesn't really get you where you need to be to think about what appropriate policy is in the near term. But back to your original question, people have been gradually writing it up because I just think people are coming to the view that rates are less likely to go down to their pre-pandemic levels, which were very low by recent history.
Watch these
measures.
22s.
Now, we
We'll put it
can't
out
really
on
know
the-
that. That's an interesting
Not just
dispute
exactly
and
where the
discussion to
orders
have now. But ultimately, we think that things like the neutral rate are driven by longer-run, slow-moving forces, and there's a really good question about whether those really have changed or whether instead rates and the economy are experiencing a series of persistent but ultimately temporary shocks. That's been the debate, and we can't know. But in the meantime, we're making policy with the economy that we have, with the distortions that we have.
So you have to take out this order.
And I also, to your other point, I think it is the case that as time has gone by, the question of how restrictive is policy has become one that everyone's asking, and we're asking it too. And my answer has been that policy is restrictive. The question of whether it's sufficiently restrictive is going to be one we know over time. But I think for the reasons I talked about at the last press conference and other places, I think the evidence is pretty clear that policy is restrictive and is having the effects that we would hope for.
Well, thanks, Chair Powell. Howard Schneider with Reuters. Just to
I
carry that a
know,
little
probably
further,
we're just going to create a
should
big
we read
range
this
here and
as a
then go back to
conclusion
where
that
we
the
started?
combination of
We
tipping
need
to
to
one
break.
cut this
We need
year
to break these
and
levels for
acknowledging
continued
further
downside.
progress on
Same with the
inflation
highs.
as kind of a mark to market on the level of restrictiveness that you need, that you in fact have concluded that you
But bear in mind,
weren't
if we do
quite there
crack
yet.
here, it's going to be a capitulation if we crack.
I'd be
here with some
reluctant to
conviction.
try to draw that conclusion. I think this is about, looking at the incoming data and asking how much progress are we making on inflation and how is the rest of the economy doing? Is the labor market still strong? That's what we're thinking about. You can translate it into the language you're talking about, but to me the focus is more on, we have a goal which is price stability, another goal which is maximum employment. How are we doing there? We think we've got a good, strong labor market still. We think we've been making progress toward the price stability goal, and then for a while there was a pause, and we look at today's thing and we think, well, that's a good reading, and we hope we get more like that. And
Luke is so
in
thin
the
as well.
meantime, we're asking, is our policy stance about right? And we think yes, it's about right. We're prepared to adjust it as appropriate, but we think we're getting the things that we would want to get, broadly speaking, and that's why we've been at this policy right now for almost a year.
So just to follow up on that, I think one curious thing here is you've got now this restrictive policy in place and virtually no change in any of the major things for all of this year. You've got growth that stays above long-run potential throughout the forecast period, unemployment that never goes above the long-run estimate, right, of 4.2. So this isn't a story of slack improving inflation. So where's the improvement in inflation coming from that it's going to pick up pace so much in 2025?
Well, it's been coming. Where's it been coming from? We'll start with that. Clearly, a lot of some of what we've been getting is just the reversal of the unwinding of the pandemic-related distortions to both supply and demand, and that is complemented by and amplified, supported by restrictive monetary policy. So those two things have been working together. We've also had a very positive supply shock on the labor side, and also you get a positive supply shock when the supply conditions unwind and return to normal. So you've had above trend potential growth and high growth, and yet you've had the benefit of inflation coming down really fast actually last year, and we'll see what the rest of this year brings. So these dynamics can continue as long as they continue. Ultimately, the question is are you down to demand? And we don't know that, though. Look at today's report. If we see more like that, we can't know what the future holds. But in the meantime, we've made pretty good progress on inflation with our current stance.
Right back at POC now.
Michael McKee from Bloomberg Radio and Television. The base case of the committee seems to be that there is going to be at least one rate cut this year, but your growth forecast doesn't see any slowdown in the rest of the year, nor does the unemployment forecast see any significant weakening of the labor market. And your inflation forecasts basically average out to no change. So if at the end of the year there is no change from conditions now, why would you anticipate cutting rates? What would be the point for a rate cut?
250.
Well,
Surely
we
this
think
is not
policy
going
is
to be cool in this type
restrictive.
of condition.
And
Surely.
we think ultimately that if you just set policy at a restrictive level,
Right,
eventually
POC
you
as
will
well.
see real weakening in the economy. So that's always been the thought, is that since we raised rates this far, we've always been pointing to cuts at a certain point, not to eliminate the possibility of hikes, but no one has that as their base case. So no one on the committee does. But so that's that's how we think about it, and that's what
More
we've been
chopping
getting. That's
bounds,
what we've been
everyone,
getting is
now
good
that we're at
progress on inflation with growth at a
POC.
a good level and with a strong labor market. Now, ultimately, we think rates will have to come down to continue to support that, but so far they haven't had to, and that's why we're watching so carefully for signs of weakness. We don't really see that. We kind of see what we wanted to see, which was gradual cooling in demand, gradual rebalancing in the labor market while we're continuing to make progress on inflation. So I mean, we're getting good results here.
Well, to follow up, is there any kind of concern for the housing industry or financial stability, banks, in leaving rates where they are for too long at this point?
On housing, the housing situation is a complicated one, and you can see that's a place where rates are really having a significant effect. I mean,
The question is,
ultimately,
are
the
we going to
best
get
thing
more
we can do
downside
for the
here?
housing market is to bring inflation down so that
Or
we
are
can
we
bring
just gonna
rates
go and
down
chop the
so
high
that the
here,
housing market can continue to normalize. There will
reverse
still be
back into the
a national housing shortage, as there was before the
POC
pandemic.
area
There will
for
still
the-
be one, but the distortions that we see now with lock-ins and things like that, low mortgages. In terms of banks, the banking system has been, solid, strong, well-capitalized, lending. We've seen good performance by the banks. We had the turmoil early last year, but banks have been focusing on bringing up their liquidity, bringing up their capital, and having a risk management plans in place. So the banking system, seems to be in good shape.
See if we can break above here, above 41s.
Thanks. Chris Rugaber at Associated Press. I was wondering if we can, on inflation, if you can tell us a little more about where you see inflationary pressure in the economy. You mentioned labor markets coming into better balance, and inflation expectations appear to be well anchored. You're seeing, anecdotal stories of the large chains like Walmart and Target are announcing price cuts. McDonald's announcing a $5 meal deal. So, people may still be unhappy about prices at the grocery store, but it doesn't seem like there's a lot of inflationary pressure left in this economy. I wonder if you could tell us more about
it. I think it's true that inflationary pressures have come down, but we're still getting high inflation readings. So
McDonald's $5 meal deal, market dumps.
In various places, in some parts of non-housing services, you see elevated inflation still, and that's probably it could be to do with wages. Goods prices have kind of fluctuated. There's been a surprising increase in import prices on goods, which is kind of hard to understand.
Right, it needs to break above 41s. Yes,
we've taken some signal from that.
But anytime it's got there,
and of course, housing services, you're continuing to see high readings there. To some extent, that's catch-up inflation from earlier pressures. But I mean, overall, you're right. Inflationary pressures have come down. As I mentioned, the labor market has come into better balance. Wages are still running, I would say, above a sustainable path, which would be that of trend inflation and trend productivity. We're still seeing wage increases moving above that. We haven't thought of wages as being the principal.
Here we go. Let's see if we can get direction here. We're just going to
but at the same time,
a couple of ticks above and then pull the
inflation
bid.
is likely to require return to a more sustainable level, which is somewhat below the current level of increases in the aggregate.
What's the clown guy called McDonald? It's not like Krusty. What's he called?
Hi, Chair Powell, Rachel Siegel
What's
from the Washington Post. Thanks for taking our questions.
The
There's
mascot
obviously
guy.
a lot of focus on
Not
how
Krusty
many
the Clown,
cuts
that's
could be expected
Simpson.
this year, but can you give us a sense
Ronald,
of
that's
what
it.
one cut by
Ronald
the end of the year
Clown.
would actually do to the economy, what you think would be a meaningful difference if there was a cut by the end of the year, or even two?
I think if you,
Oh,
if you
nice.
look back in 5 or 10 years and try to
Well, the thing is, they
pull
give
out
you a
the
meal deal, but
significance
they
to
give
the
you like
US
a tiny
economy of
burger
one
or
25
something.
basis point rate
I'd
cut,
imagine
you'd have quite a
you
job on your
basically just
hands.
incorporate shrinkflation, so it doesn't really make any
that's
difference.
not how we look at it.
Okay,
really
so
the
we're
whole
seeing some
rate
size
path
trying to stack up the bids.
matters,
Let's see if
and
they're going to pull here.
I do continue to think that when
This has
when
been
we
the first.
do
We've seen
start
a little bit of
to
boom.
loosen policy, that
the-
will show up in a significant loosening in financial
Been
market
the most I've seen
conditions,
on the bid.
and the market will price in what it prices in. I have no way of
You know, it's the
saying
difference, and
we're
all
not
the way
at that
down
stage,
there,
so
they're
I
just
don't know
really stacked up the
what
bids, and
we'll
then they're
be
going to start pulling.
thinking about it at that time. But it's a consequential decision for the economy.
Notice if we get to
and,
49s or just before it, and then they
you
pull
want
the
to get
bid.
it right. And fortunately, we have a strong economy, and we have the ability to, approach this question carefully. And we will approach it carefully
Ronald
while
McDonald.
we're very much keeping an eye on, downside economic risks should they emerge.
And you've been talking
Okay,
about
so we chopped the
this clear
lows
sense that it's just going to take
back in,
longer
chopped
to
around
have the
POC.
confidence that's needed for rate cuts. Is there something about what happened
Again,
in
the
the first
market
couple
now
of
needs
months
to
of the
break
year that you're
49s
seeing
with
differently now
conviction
with
if
more
we've got
time or
any
hindsight?
bids
Do you
to
still
continue on.
characterize it as
It looks
expected
like we're
bumpiness or
just
something more lasting
hitting the
that
higher
is affecting your policy
range,
for the rest of the year?
back down to POC.
You always want to avoid the tendency to dismiss the parts of inflation that we
There's the bid
don't
pools.
like and just make it go away. So, but we had a quarter where inflation was running higher, and yes, I could stand here and say it's stuff we shouldn't have taken signal
Did
from,
he?
but it is what it is.
Yeah, he's a bit of a
have
creep,
to-
isn't he?
Low inflation is low inflation, high inflation. So if you have a quarter where it's higher, we tried not to take signal from the first couple of months, but we got a third month and we said, okay, the signal we're taking is that, we think it's going to take longer to get confidence that inflation is moving sustainably down 2%. That's what we said. I think that was the right thing to do. I still think that's the right thing to do. Now we have today's inflation reading, which is very different, very much more positive. We're going to have to see what the trend is, what's going to be the data going forward. We're looking for something that gives us confidence that inflation is moving sustainably down to 2%. And readings like today's, that's a step in the right direction, but one reading isn't. It's only one reading. You don't want to be too motivated by any single data point.
Jolene.
Oh,
Hi,
say
Chair
it
Powell.
so.
Thank you for taking
Back
our
to
questions.
POC
I'm Jolene Kent
again.
with CBS News. What's your message to Americans who are seeing encouraging economic data but don't feel good about this economy?
I don't think anyone knows, has a definitive answer why people are not as happy about the economy as they might be. And we don't tell people how they should think or feel about the economy. That's not our job. People experience what they experience. All I can tell you is what the data show, which is we've got an economy that's growing at a solid pace. We've got a very strong labor market with unemployment at 4%. It's been a long time since we've had a long stretch of time with unemployment at or below 4%, very long time. We had a period of high inflation. Inflation has come down really significantly, and we're doing everything we can to bring that inflationary episode fully to a halt and fully restore price stability. We're confident that we'll get there. And in the meantime, it's going to be painful for people, but the ultimate pain would be a period of a long period of high inflation. It is people who, lower income people who are at the margins of the economy
watch the spoofs there, right?
Who have the worst
100% the
who
strategy
experience
is they're
the
just
most
trying to
pain
get
from
another couple of
inflation.
ticks out of the market and then
It's
pulling.
for those people, for all
They're just trying to
Americans, but particularly for those
anticipate
people
more
that
people
we're
buying.
doing everything we can to bring inflation back down under control.
As just a quick follow-up here, you've indicated one interest rate cut sometime this year, and I know you don't have a crystal ball up there, but a lot of people are watching and see, borrowing money remains very expensive. For everybody who's out there waiting on a rate cut, about when can consumers expect some relief?
Well, I don't have a precise date
He's
for
just
you.
never
but
gonna answer
what
that
we've
question,
said
is he?
We want to make
Fucking
sure
hell,
that
Ian.
we're confident that inflation is actually moving back down to 2%.
When roughly?
And when we are, then we can look at loosening policy. So having that kind of confidence that inflation will be at 2%, it just
There is
pays
an exact
benefits
date.
to the whole economy, to all Americans for a long period of time. We had that period for a very long time. We very much want to get back to a place where people can not think about inflation. It's just not a concern in the everyday economic decisions that they make. We were there for a long time.
She definitely came for
and
the
our
buffet
goal is to get
for the
back to that
conference.
place.
That's
And
why
we've made-
she's
we've made
there.
good progress, and we're in the phase now of just sticking with it until we get it done.
Yeah, exactly.
Claire Jones, Financial Times. Just drawing on the change in the statement on there being modest further progress on inflation. Halfway, through the year and after today's CPI release, what have you and other committee members found that has been particularly
She must be
encouraging
really
to
stressed.
you? And just in terms of the conservatism, how
wow.
much of that is about
Veins are popping
stickiness
out her
and
neck
shelter
there, man.
inflation in particular? Thank you.
So
You guys see that?
encouraging has been that growth, the growth clearly that we had last year, and particularly the second half of last year, and we continue to see still strong growth, or solid growth this year. That's been very encouraging. If you go back a year, there was a real concern about, very much slowing growth.
This guy's been talking for 40 minutes but not said anything. Data, we need new data. We don't really have a clue what's happening. We can't predict anything. We need more data. And actually the numbers that's come out in the last 2 months, they're going to be revised anyway, so we don't have a fucking clue.
Today's inflation report is encouraging, but it comes after, several your reports that were not so encouraging. You ask about your second question was really about shelter inflation. So I think if you go back a couple of years, we know that there are renters, and then there are people who own their houses, and we have OER, which is owner's equivalent rent. And so when market-based rents go up sharply, as they did at the beginning of when the economy reopened, they really went up sharply. Those play into rollover rents much more slowly for existing tenants than they do for new tenants, and so we found now that there are big lags. So there's sort of a bulge of high past increases in market rents that has to get worked off, and that may take several years. Nonetheless, as long as market rents are going up at relatively low levels, and they still are. This is just going to happen. It just is going to happen more slowly than we thought. We also do sort of this thing where we impute rental value to owned homes, and that's many countries around the world do that. Some do it differently than us. It's something that the price experts have regularly looked at. It is not something that we're the only country that does, and it's not something we're looking at changing or would look at changing, anytime soon. But it's true. It's one of the very hardest things in inflation and in prices is how to think about, the services that someone is getting by living in a home that they could rent, but they're actually living in it. And some countries choose to just ignore that, but that's not how we do inflation here. We do it the way we do it, and we've been very transparent about it. And it's true that we're seeing delays in realizing what's happening economically. But
Did you see that it removes coffee from the inflation numbers? Did you see that? And it really affects Starbucks share price.
Edward Lawrence with Fox Business. Thank you for taking the question, Chair Powell. So I want to go back to jobs and the consumer. The last jobs report showed that over the past year, 634,000 more people took multiple jobs. That's up 8.2%. And since January of 2021, we've seen prices rise 19%. So people are using their credit cards to pay for their lifestyle. What pressure points will signal to you that the slowing economy could maybe break companies in terms of hiring or break the consumer in terms of spending?
So, we monitor all the things you mentioned and more.
So Neil, I've had a background in finance for years. It's just
spending was going up faster than disposable
just ingrained
income
in you, to be
during
honest.
parts of last year rather.
It's just off the cuff. You probably won't even need to rehearse
You'd
this.
expect to see is people spending more on their credit cards. That has been happening. Credit card balances have been going up. Credit card defaults have been going up. They're not at high levels. Remember that after the pandemic, people were cooped up. They couldn't spend money. They couldn't go out to spend money.
Never give any direct answers. Don't say too much, but
very, very strong,
always
historically strong financial
pay attention to the data. But yet the data is not even accurate.
We're watching that carefully, and what do we see? That's what we see. We see the same
broken
data
down
that everybody
here.
else sees, but you've still got household sector that's in pretty good shape. But nonetheless, it's not in the kind of shape it was in a year or two ago, and we're carefully watching that.
So how close then are we to that point where the consumer can't continue to spend as they're spending, or companies can't hire like they're hiring?
We'll maybe see when he's done talking
It's
completely
not
if it does anything.
It was growing at a year or so ago, but
the market, the market's basically saying about this speech, we don't know what you're talking about, to be honest, either.
Spending on equipment and intangibles has picked up quite a bit in the wake of all the construction of new tech plants. So overall, the economy is exhibiting solid growth, and
yes, has to catch up here, surely,
which is a good pace of growth for the U.S. economy. But you're right, though. We do see the same thing other people see, which is increasing financial pressures on
look at that.
More lower income people, and the
Yes,
best thing
it's
we
just
can
not
do
moving.
is
Interesting.
is to foster a very strong jobs economy, which we think we have done. Ultimately, to get inflation
What
under
a
control,
stopper on that
because
was in
those people
NQ.
experience inflation, very directly, very painfully, and once we get inflation under control, rates can come down, which will also improve
Jeez,
things.
man, that was like a 50-tick stop run in NQ there.
Hi,
In seconds.
Victoria Guido with Politico. You've mentioned that an unexpected weakening in the labor market would bring rate cuts sooner, and I was just wondering, can you talk a little bit about what that would look like? Is it more of like a
Probably does,
quicker pace of people losing jobs? Is it more the level of the unemployment rate if it were to start to go above 4.2 or something like that? How are you thinking about what you're looking for to see the job market unexpectedly weaken?
Exactly, that's the thing.
When I say unexpectedly, the first thing is more
when you
than
know so
kind
much
of
information
is in our
about it.
forecast or in common forecasts. So something more.
And the
than
guy
that.
sounds very confident in what
but
he's saying, so
we'll be
everyone
looking
just
at
believes
everything.
him. Because let's be
the
serious,
labor
we're not
market,
analysing the numbers, neither he.
Has
He
the
has
ability,
people
has the
analysing numbers
tendency
and he'll just give them a
sometimes
general
to
briefing.
move
And
to
he's
weaken
probably worked for
quickly.
Goldman
So
or JP. I
waiting
don't
for
really
that to
check the guy's
happen
history,
is
but I
not
can
what we're
guarantee
doing.
he's probably worked for a
We're
large
watching very
investment bank for the
carefully.
majority
We're
of his
looking at the
life.
balance of risks. I always point out the balance of risks. So, and also the fact that we look at all of the whole situation. So, a decision to begin to, loosen policy could have several reasons associated with it at a given time. But I would just tell we monitor all the labor market data, and if we saw troubling weakening more than expected, then that would be something we'd consider responding to. But we look at the broader context of what's going on too.
So something like negative payroll numbers would be.
I'm not going to. I mean, I can think of things many things would make it on that list, but I don't think I'll utter them here.
Thank you, Chair Powell. Simon Urbanovich with The Economist. May I ask, you mentioned with the slightly higher PC readings earlier this year that it wasn't 1 or 2 months, but 3 months.
laughing in
tipped
the
you to be
speech
a bit more cautious in the rate
algorithms just
outlook.
spaz out.
Should we take from
It's
that
not meant to
that,
be laughing.
it looks like May will be quite good for PC as it was for CPI?
Oh,
Does that
God.
imply that kind of 2 more good months would reinstill the confidence that rate cuts could be coming sooner than you currently project?
I don't actually have that kind of mechanical thing in my thinking. I get that, as many good ones as we had bad ones, but no, it's not like that. It's going to be the totality of the data. The labor market data, the growth data, in terms of inflation, you'd want to see real progress that builds your confidence that we are on a path down to 2%. And I don't want to try to give you specific numbers of things because that points to dates, and I just don't think we're not at a point of being able to do that.
Of course you don't give dates, buddy. Of course. Don't be so fucking stupid.
Thank you for doing this. I'm Kosuke Takami with Nikkei. I would like to know about the impact of stronger dollar on U.S. economic
Stocks
growth
coming.
and prices.
Here we go. Hit this hard. Stocks
I have
being
no
here.
doubt that the market should determine the exchange rate, but Japan and some emerging markets are suffering from the strong dollar. So I want to know if it is having a positive impact on U.S. economy in total. Thank you.
So we don't. Actually, it's our finance ministry, the Treasury Department, that has a responsibility for thinking about and if it sees fit, doing things about the level of the dollar. So for us, it's just another financial variable. And you're right, the dollar has exhibited some strength over the course of the last year or so because the U.S. economy is very strong. We don't think of it as benefiting or hurting the U.S. We don't manage the level of the dollar. That's not our job. It's not. And for our economy, what we're trying to foster is maximum employment and price stability. And we feel like we've made good progress on both of those goals over the course of the past year.
Jennifer. Thank you, Chair Powell. Jennifer Schonberger with Yahoo Finance. You said you would cut rates before inflation falls to 2%. You're forecasting inflation to end the year at 2.8% on core PCE, or at 2.8%, of course, on core PCE. Right now, you said the inflation forecast is conservative and that if you got 2.6 to 2.7 on PCE, that would be a good place to be. You also indicated the job market has mostly normalized. So why not cut rates this
yes.
summer just
What are you waiting
once?
for?
You're well above neutral to
Uh-huh.
try to preserve the soft landing rather than risking waiting too long
Good
in the
girl,
quest for
good
confidence for
questions.
inflation.
You know, so we're well aware of the two-sided risks here. Let me just say, we understand that if we wait too long, that could come at the cost of economic activity, of employment, of the expansion. We understand that if we move too quickly, we could end up undoing a lot of the good that we've done and have to then start over, and it could be very disruptive. So we're extremely aware of both of those risks and just basically trying to manage them. And what we said is that we don't think it'll be appropriate to begin to loosen policy until we're more confident that inflation is moving down to 2% over time on a sustainable basis. That's kind of been our test. Or there's another test, which is, you know, an unexpected deterioration in labor market conditions. So I think that's the right way for us to think about it. That's our dual mandate there. And you know, we have a strong economy. We've got growth. All forecasts are very commonly around 2%. That's a strong growth rate for our economy. The labor market continues to print jobs at a pretty high rate. Unemployment's still low, so we have the ability now to approach this question carefully, and that's what we're doing.
And just to follow Chair Powell, do you need to be ahead of a weakening in the labor market? Otherwise, is it too late, given that the labor market is a lagging indicator, right? When you look at the monthly jobs
We have the
data.
ability to basically see
completely
nothing.
understand that that's the risk, and that's not our plan. Is to wait for things to break and then try to fix them. We're trying to balance these two goals in a way that is consistent with our framework.
Mark is bidding
And,
on
we
that
think we're
girl's
doing that.
comments there and what he's saying, at least. Makes sense.
Thank you, Chair Powell. Evan Reiser with Market News International. You have mentioned before the framework review process will start in the latter half of the year. At this point, do you have any specific time
His
frame
reply
for the
there
start
made
of that?
didn't even. His
Who will lead it?
reply
Will you be- will it be
literally
you or a
said
member,
nothing.
a committee group of your peers? What will be the parameters?
And the market's going bid on it as
Do you
well, because it's
anticipate
basically
the
saying
review
if you're
will
hitting those
consider
numbers and
changes to
stuff,
communications going forward?
like you've already said,
So
you're going to lower
we-
inflation, so
what
sorry,
we've been
lower
thinking is
rates.
that we
So
would
why are you not
announce
doing it?
and
And
commence
he's like,
the
meh.
review
We might
later or
not
late in the
need to
year.
wait for more data.
In the meantime, as that time approaches, we will be devoting a lot of careful thought and planning to the contours of it. Within scope would certainly be communications generally. I'm not going to say that we'll look at this or that particular thing, and all the other details. We don't want to get prematurely into a conversation until it's really time to have it. And so, I'm going to leave pretty much everything else to later in the year.
Go to Nancy for the last question.
Hi, Chair Powell. Nancy Marshall-Genzer with Marketplace. Just one more question on housing. Can you still cut rates with shelter prices high, or will you wait until they start to moderate a bit?
I wouldn't, there isn't any one thing, one variable like housing prices moderating that would really decide against what we're doing. We've got
We're
an
about to take out the
overall,
high in the profile. Let's see if we can do it. Are we
test,
going
which
to
is
sweep and then revert
greater
back?
confidence that inflation is moving down to 2% on a sustainable basis. That's our overall test. Or alternatively, we see unexpected weakening in the labor market. So those are two different tests. I would say, we're not looking at any one price in any one sector and saying that's the one. We don't target housing prices, for example, and we don't target wages. We target aggregate prices and overall employment. So.
But if housing prices remain sticky, could that slow down the pace of rate cuts?
I think you'd look at we'd be looking at the aggregate numbers and asking ourselves what's going on here with inflation at the aggregate level. And of course, if any price that contributed to ongoing inflation would matter. Any price that contributed to ongoing disinflation would matter too. But I wouldn't single out housing as having a special role there. Thank you very much.
Oh, let's sweep that is. Let's see if the bid's going to continue pulled. Well, what an absolutely non-event that was. He just spoke there for like an hour and said absolutely nothing. I mean, seriously though, guys, right? You actually watch that and you're more confused than yeah, exactly. Every single time it's like, look at that for a sweep of the high. My goodness. What a sweep that was. Just, you know, classic. This after you're watching that speech, right? After watching that speech, it makes perfect sense to go back to the POC. So all you're just doing is taking the high, taking this low, you know, classic. But yeah, that guy's just an expert in just word sandwich, but saying absolutely nothing. So we still get M period to come in. It starts in like 7 minutes, so we'll see if the market's going to get some oomph. Yeah, makes sense. Makes sense. At the end of the day, the you know, the girl asked pretty good questions, right? She was basically saying, look, you've said prior, you know, that PC numbers need to get to 2%. It's at 2.8%, and you want, you know, if it gets lower, which you're forecasting it will, why do you not just basically lower rates like right now? And he's like, well, even though I said that, data. It seems to be always after the speech we see movement as well. Here we go. Yeah, what a coincidence, huh? Let's see if they hit this. There's an iceberg there. Let's see if they smash through it. Someone's holding up the market here. Just been 1,000 contracts traded in those three prices there. There we go. Let's hit through it. Yeah, Pete. Exactly. Right, let's see if we're going to take the lows here. Or are we just going to reverse? There's definitely some selling pressure coming in, that's for sure. And everything is ticking down. If we get another sweep of this level and back into the POC, and then just offers pulled, oh my god, honestly. These type of market conditions, man, seriously, are literally algorithm heaven. This And it's not even costing them a lot. It's costing these dudes 1,000 contracts to hold a market. It's crazy. Well, it's a lot for us, but for them it's not. You can literally stop the market for 1,000 contracts. There we go, another spoof which is going to be pulled. No, it was taken. Wow. Here we are. Tons of stops down here. 22s was the level. Here we go. Needs to crack this level with some oomph. It's looking like it right now. No. Surely not. Surely not hit this again and back to POC. There's a good amount of negative delta coming in as well. Needs to crack 21.5 here. Yeah, it's brutal. No. I mean, it pretty much verging is, verging on a scam, the way ES trades these days. I'm so glad that I'm doing my predominant trading in treasuries. This is just so whipsawy with no direction. And these guys, like I'm saying, man, they're holding the market with 1,000 ticks. Here we go. This should be going right now. The sizes come in, they've hit this level, hit into this and clear 20s with some size, and it's going. Crack it. It's still holding here. Get this iceberg at 20.25. And then the offer is then pulled again. I mean, did you see there the 20.25 literally held the whole market, and then it lifted into the offer and the offer has been pulled. Look, you've seen the market go up there with 49 traded, 31, 22, 38. And now we're looking like we're going back to the POC. Surely now though, do you notice how the market, how it's moving though? It's just the bid and offer's just been pulled. Yeah, that had all the hallmarks to crack there, right? I mean, if this cracks 16s, this should be going, but it's just the pulling it. I mean, the market can shoot up 6-7 ticks here. And nothing's trading. Right, here we go. A little bit of conviction. Need to continue to reload an offer over like 4 prices, considering it's that thin. 18. It was 20 and a quarter, I think I said. Oh no, Neil. Are you in a trade? Oh no. They've been having. Are you using? Do you use Rhythmic for data as well, buddy? Because if you do, I've heard terrible things about issues they're having. Yeah, hopefully you were short and it just dumps for you if you can't close it or whatever. Yeah, it's a bit of a. I don't know if it's the data or the order routing, to be honest. I can't comment on the data because I use Denali for everything. I use it for Teton routing and any Rhythmic that I ever use. If sellers don't crack this soon, we're going back to POC with this rate. Yeah, exactly. It's really good. Denali's feed is good. When you pay for it though, it's quite expensive, but well, they need to basically crack this because the thing is, there's a lot of selling going on right now, but the market's not hitting. So if buyers start getting aggressive right now, like I was saying, everyone knows right now if we crack 16s with some size, this is going to the floor. So we'll see if they're gonna crack it or not. I would maybe check. I think there's a few other people that potentially in the group, Neil, that trade Apex. Check if they're having issues with Rhythmic, because if there's widespread issues, they may reset the balances. But if it's wrecked your account, it's a nightmare, because then you know what these companies are like. $25's holding up. Let's see. But 2.8. Here we go. Off the POC we go. Right back into value. They disabled the chat. Wow. Wait, what do you mean? They actually. What do you mean? They turned off chatting on the Discord or something? No. You can't chat in the Discord at all. Wow. I don't know, man. Them doing all those rule changes and stuff that I've seen recently, and it seems a little bit like one of those last-ditch attempt cash grabs, to be honest with you. Hopefully you get it sorted, Neil. There's nothing worse. Trading's hard enough, man, without doing that. You know, having that against you, man. Well, the other thing, and correct me if I'm wrong, but I don't know if Apex even puts anyone live, so they simply need to make money. They simply need to make money from people that fail challenges, and you have some good traders that are rinsing them. You know, like 200 grand a month stuff. I've seen some people do. Don't know if I believe it or not, but you know, if you've got 20 accounts and you're making like 200-300 quid a day, you know, it's a lot. You'd be taking them for the guts of 80-100 grand a month. I mean, that's a lot of accounts for one person. I know these companies have got quite a big turnover and stuff, but 100 grand going to one trader potentially. You know, like that Matt dude or whatever. Have you ever watch him? What do you guys think? I don't really understand the strategy if he's really got one, but I think the arc. I don't think so, James. I don't think going by how shocking the website has been and stuff, and just how terrible their. I don't know. There's just no technology in their business, right? So if there's no front end and no technology in the business, how would they give any technology in the back end to be able to copy trades and properly manage risk? There's just no chance there that that's happening. Okay, here we go. Working away to 16s. What do you mean you can't copy your trades, Jackson? Right, we want to see some blood, so let's try and take 16s. To be honest though, I would be surprised if we do. I think most likely we're just getting back in value, to be honest. Oh, right. I don't know, I've always used Sierras. I've used Sierra's built-in one for a long time, and it's very simple. Never had any problems with it. See, how did treasuries do? Oh, so treasuries sold off, wow. Okay, so treasuries is out of value. Interesting. Let's see if we're going to finish back up here in treasuries as well. So we pull back in ES and pull back in treasuries to see. But treasuries is, but this time right now, we're probably just going to fill this out. Treasuries are not going to trace this all now. That's pretty much done for treasuries, to be honest. We'll probably trade out another 4-5 tick range. But yeah, you see that, all that craziness happening, and you look at treasuries and this has happened. I should have watched that. Yeah, I agree. I agree with you, Neil. So we're toying with this area down here, with volume coming in 7 minutes. I would ask in the Discord, our Discord, Neil, if anyone that's trading Apex is had any issues with Rhythmic, just to, I don't know, to get a feel. I couldn't actually tell you if any of our community does trade. I don't really discuss prop firms that much. No, I completely agree with you, Neil. I think James, I think Apex has been having I've sort of heard in some other groups that I'm in, or just private groups. I can see they've had a lot of issues. Apex has lately, as far as I'm aware. And I couldn't tell you. I've never had any issues, just simply because I never use Rhythmic data, so I don't know if it's the data or if it's the order routing that's the problem. Here we are. Are we going to take 16s? We've still got the potential here to. We'll see in the next four minutes how it's going to go, but can you see us really capitulating 16s right now and taking stops for the last 15 minutes of the day? Rhythmic on tops, that's working fine. What software do you use, Scratch? Do you use Sierra, or do you use do you use anything else? Just pop this in the chat. Oh, Quanter. Pop this in the chat for anyone who wants to support the channel. How do you find Quanter for the for the depth of market and stuff? Is it pretty good? Is it responsive? Here we are, ripping up now. See if we'll take that. Do it. It's not bad at all. Nice one, Scratch. That's what I like to hear, buddy. This has been the definition of sweeps, literally to the tick, reverse back, down here, reverse back. I need to. I mean, I say this, but like these are my perfect setups, and I'm not taking them, which is kind of annoying. But then, to be honest with you, the times that I say I'm going to trade in the evening session, I end up doing Marcin, so I consistently make more money trading in the morning of US session than I do in the evening. I suppose you just miss trades. Because it's the way the market's been going lately is glorious when you have a sweep by a couple of ticks, absorb, and then just instantly the bid's pulled, and then this is like a painless one, you know, right back to POC, and it's taken 5 minutes. So, did everyone take any trades for FOMC there? How did everyone finish the day today? Oh, Neil. Hopefully, I hope you get it sorted, man. What are you? Are you long or short, Jackson? There we are, right back at POC. Jeez, oh. Well, that's pretty much it. We're definitely not cracking the lows now in the next 10 minutes. We're just going to go back to POC and chop around and close out some positions for the day. Sure. Or do you trade the overnight session, Scratch? Nice. Did you not say that you traded options or something, Jackson, or am I making that up? Yeah, stay green. Stay green. We're probably got about 10 more minutes. We'll just see what algo, what algo brings at the top of the hour. See if there's any excitement. But I doubt it. It's been a classic sweep high, back into the range, sweep low, back into the range. Makes perfect sense after that speech, because that speech delivered absolutely nothing. Thinkorswim. Nice one. Let me know if anyone's got any questions. Hopefully you had a good stream. Yeah, it seems really sus, doesn't it, Neil, that they disable the chats. You know what I mean? That's weird, man. It's that, and honestly with you, man, that's just not how you do business. Do you know what I mean? You don't cut off the support function or whatever. You just don't do that. The problem that I've got with the likes of Apex is just how these large streamers absolutely pump Apex to people and make it out like it's such a great firm and stuff, you know? It's actually quite a seedy part of the market and seedy part of YouTube, to be honest. Like that Patrick Whelan dude, you know, probably doesn't even trade, to be honest. with you. Hey Scratch, I used two. Well, what was the deal? Did that like take your account out, Neil, or did you hit like a drawdown limit or anything along those lines with what happened? I take it you're on support right now. Someone just absolutely absorbed there and didn't even. That was weird. See that there? Someone just lifted the offer into all those prices, nothing sold, and the market went down on Russell. Yeah, but he when I look at I've only ever watched his stuff once or twice, and he's just got random. He's just got a VWAP line up and just clicks buttons. There's not really any strategy. Same with, I think I would like to think that Trades by Matt is doing a good job, but his his strategy doesn't. Still don't really I've watched this stuff quite a bit, and I still don't really understand what the chap does. Like I feel he takes like fresh wick retests or something, and hits a contract on. Here we go. Hits a contract on NQ and just gets out for 20-30 ticks or something. Some size have just come in there. 9 o'clock algo time. What do you mean by restarted, Neil? So it didn't, but we're pretty close. I'm down. I mean, if you can trade on stream and do it, I find it really difficult to chat, watch the chats, commentate, watch DOMs, execute, manage position. It's really hard. So, especially as well if you're, so hats off to them if they are actually doing it, but I think you need to do it in the morning, a morning session, to be honest. If you were to be streaming, but I think they do though, right? But when these guys stream though, they get like 4,000 and 5,000 people and stuff. No, they don't use a DOM at all. I find that when I'm trading, I can really only trade for like 2-3 hours a day, because it's intense. Like it's really intense. And I normally need to take breaks because I'm watching 4 DOMs glued. I'm constantly checking the pooling and stacking. I'm checking the delta. Where are we in context? And I'm waiting to see like a pressure point of an area, or are we at a key level? It's quite intense to do that, and it's and the trouble is as well, yeah, I'm not great at multitasking. So, yeah, it was a good day in Treasuries though. It's a good day. Yeah, exactly. I think there's a difference between like like with regards to selling a course. I don't think it makes a course is not what makes trading. It's screen time, learning the different perceptions and outlooks that's needed in a market. There's an iceberg here at 25s. Um, Learning the different outlooks you need to have, how to trade, journal, how to manage your risk properly, and just really to gain experience. You know, drawing random supply and demand rectangles and none of that's relevant. You need to have the experience and screen time. I still do think though, not like a course, but I think coaching to keep you accountable is good. Same reason why when you go to the gym you get a personal trainer to keep you accountable. Same idea. But I think in terms of buying a course to look at a specific mechanical strategy, I don't think that's the answer. So I'm putting out way more valuable content than these people, specifically regarding order flow. This takes my time, it takes effort to do that. It takes my time. So if people want to support the cause for that, then great. If they want more coaching, then great. I'm not selling a course for like $59 where I tell you how to draw a rectangle and here's a delta divergence, so you press the buy button. Do you know what I mean? I'm not doing that. Trading is not that simple. As another thing, what I'm never going to do is I'm never going to shill a shitty prop firm to people. There's so many streamers as well that are saying, oh, here, let me just buy evaluations and blast them but use my prop firm code or whatever. Yeah, it should be, I suppose so. However, I get that argument, of course, but I still think in general though, the value is in the content that's provided and the structure of everything that you want to get out of it. Same thing as if you feel there's value in something, then that's great. Some people don't get the value, then that's no problem. At the end of the day, right? You can literally find everything online. But the trouble is how do you implement it, and how do you get the experience to do that? That's the hard part. For someone that's been doing it for a long time, they can probably tell you with a better inclination that, right, when you're in a day of balance and it's at a specific time of the day in the PM session, and we're at the top of a value area high, as an example, is there a higher probability that we're going to fade back into the point of control, or for that session, or are we going to continue to rip highs, just as an example? That all comes with experience. Well, that's the thing. I mean, I'm basically working on the setup where, the Discord and the content and everything, it's not restricted. It's not restricted to. You don't have to pay something, but if you find it valuable and you want to show support, by all means. I mean, I'm not forcing people to do anything. To be perfectly honest, I don't really need it. It's just more of a thank you, and it's appreciated. To be honest, because it takes a lot of time to come up with the ideas for this. Not saying that I'm editing, to be honest, because I try to do it in one shot. Because I don't edit. I'm not I'm not a flashy YouTuber. That was never the goal of this channel. The goal was actually to try and build a community of like-minded traders, try and help people shorten their learning curve, so that they don't strategy hop, waste time looking at doji candlesticks and stuff, and try and get them to their goal a little bit quicker. That was all, and have fun in the process, to be honest. Yeah, Tony, I'll do some. I don't know. I'll need to come up with something that could be cool for the partner program thing when I do reach that. It'd be good to get your feedback on that. I don't know if there's like a. I don't know if there's. You need to give me some ideas, to be honest. Yeah, exactly, and that's the thing, DV. It's completely up to the person in general, because if it does it, it's kind of like a positive reinforcement for me, so that people are enjoying the content and are finding it valuable, so I can continue putting out the same stuff. Thanks, Donya. Appreciate that. Well, I'm from Scotland, so the whiskey here is really good. Um, there's a lot of good whiskies here. No, I'm Scottish. A lot of people, though, if not based in the UK, though, they kind of get them mistaken quite a bit. Exactly, exactly. And that's the thing, Tonya. It's I need to come up with ways for the partner thing and stuff to see if there's like integrations and stuff I can do. Um, I'm trying to think what the really good whiskey's called that I like here. It's shocking. There's Auchentoshan. Uh, Ardnaho is one. That's terrible. I can't remember what were they called. Give me a little second. No, Glenfiddich's terrible. I'm just gonna have a look at this. Scottish whiskey brands. I think it begins with a B. It's not a blend. There's a lot of Scottish ones. I'm off on a tangent here. Bowmore's one. Ah, that's the one there. Here it's here. Bruladic. Really, really good whiskey, this one. I'd really recommend this one. Fantastic whiskey. If you're into whiskey, try this one. I'll put a link in the... I'll put a link in the chat. Just from outside Glasgow, Vader. Oh, Farah's from Ireland. Nice. Is that Southern Ireland, Yutaka, or Northern Ireland? So we finished the day here really in a choppy chop here. Let's have a look at the profile. Look at that, PCI come out, poof. And then we have this weird B. Not really. Well, it's kind of outside. It's like 40 minutes from Glasgow, but it's one of the bigger cities. It's, you know, all places are pretty cool when you don't live in them. You know, you guys probably appreciate that as well. You're probably kind of a bit sick of where you stay because it's repetitive. The one thing I would say about Scotland is the weather is not great. It's kind of damp, and it's not that sunny, to be honest with you. And taxes are a little bit high as well. But UK's like that in general, to be honest. But relatively chilled, though. That's what the whiskey's for. Yeah, exactly. I actually have, despite being Scottish, to be honest, I've not been drinking at all. I think I've had my favourite beer is Startup Ramen. Do you know the Czech Republic Prague beer, the premium lager? Oh, it's a really good beer. Ice cold frosted glass and a pint of Startup Ramen. Amazing stuff. Amazing stuff. But I think I've maybe had 5 beers this year, so I don't really drink. I love coffee. I know, Scotsman, I know. Trust me though, when we have a drink though, we certainly go all out. We don't have a... to be honest with you, what tends to happen, like, when you don't drink that much, you guys know yourself, you have a session and then the next day you're really, you regret it and you lose touch of reality for a couple of days while you recover. Well, I do drink, but not very often, man. Has to be for occasions these days. And see, to be honest with you, I feel much better for it. I feel more vital. My routines are better. My training sessions are better. Things like that. But I still do love a sesh, same as everyone else. Yeah, exactly. It's all downhill from there, Vader. It's all downhill from there, mate. Are you being sarcastic there, Neil, or just not one of your vices? I completely get it if you don't, to be honest. We don't have Mormons in Scotland, in the UK. Oh, you've been serious. Good choice, Neil. Good choice. Well done. I like your style, honestly. Every weekend, every weekend is you're fresh. So fantastic life choice, man. Well done. Seriously. You probably extended your life by like 15 years as well. If you don't drink, you just get your kicks out of 20 contracts long on ES. Oh, I am 5-6 coffees a day. I've got a really good coffee machine. It's a Carista Pro. Espresso, and it's fantastic. I have like maybe, yeah, it depends on the day, but between 4 and 7 espressos a day. Yeah, exactly. Well, the thing is, coffee is again another addictive one. Like within the first hour of the day, I have to have a coffee. But it was a relatively different stream this evening, everyone. We had the Powell circus that was on, where we sat and watched him for an hour say loads of words, but didn't really say very much. He could have summarized the speech with data. Data, can't give you any dates, and we'll need to wait for for more confirmation. So hopefully you guys have a thanks for coming to the stream again, much appreciated. Thanks to everyone as always. I'll be chilling in the Discord, and we'll be live tomorrow from roughly the same time, and we can catch up. Hope everyone has a great session, and if you're in the Discord, we can chill out in there for a while this evening. But hope you guys have a great evening, and until tomorrow, everyone stay green. Peace, everyone.